A major political trading scandal just hit the tape, involving six-figure sums and a significant gap in federal transparency. Kash Patel is a high-ranking official at the FBI, the very agency that investigates cryptocurrency fraud. Now, his own private market activity is the focus of a regulatory violation. In November, Patel purchased between $100,001 and $250,000 of MicroStrategy stock. He did not disclose this position to regulators until late May. Under the STOP Act, any trade by a government official exceeding $1,000 must be reported within 45 days. Patel waited over 6 months. Patel's team attributed the delay to a miscommunication, and the Department of Justice stated that the trade created no conflict of interest. Setting aside the filing error, the scale of the investment itself is a specific data point. We are looking at a top-tier security clearance holder committing significant personal capital to one specific corner of the market. Why would a director-level official at the FBI place a six-figure bet on a crypto infrastructure firm while his own agency monitors the sector for fraud? This level of hidden conviction from a government insider suggests a specific outlook on the value of these digital assets, one that is being mirrored by the company's own leadership. To understand the trade, we have to look at the mechanics of MicroStrategy. MicroStrategy is a $60 billion corporate proxy for Bitcoin. Its legacy software operations are now effectively a wrapper for its massive digital holdings. MicroStrategy chairman Michael Saylor has spent years positioning the firm as the primary vehicle for institutional Bitcoin exposure, but his recent moves tell a different story than Patel's. A paradox is emerging in the SEC filings. While government officials and retail buyers are loading up on MicroStrategy stock, the man who built the company is doing the opposite. For investors like Patel, MicroStrategy is a regulated way to gain leveraged exposure to Bitcoin. But for Saylor, the stock is simply a tool to acquire the underlying asset. June SEC filings show Saylor sold 2.7 million shares of MicroStrategy stock, raising $335.5 million. He immediately converted that cash into 520 Bitcoin, worth $35 million at the time. This pushes MicroStrategy's total holdings to a staggering 847,363 Bitcoin. The mechanism is clear. The founder is offloading the proxy stock to own the pure asset, while the FBI director is quietly acquiring the proxy stock. This turns MicroStrategy into a liquidity vacuum. It absorbs traditional fiat currency and permanently removes Bitcoin from the open market. Patel's portfolio raises a larger question about the strategy currently being discussed within the U.S. government. Geopolitical analysts are increasingly exploring the concept of a sovereign Bitcoin reserve, a national stockpile of digital assets used to hedge against currency fluctuations. If the U.S. attempted to build such a reserve by buying on the open market, the sheer volume would trigger a massive, destabilizing price spike. This has led to a theoretical thesis. The government could achieve its goal not by buying Bitcoin, but by acquiring MicroStrategy. Proponents of this theory suggest that MicroStrategy could eventually be classified as critical financial infrastructure, providing a legal pathway for a state-led takeover. Such a move would allow the national treasury to absorb over 847,000 Bitcoin in a single corporate action, bypassing the volatility of public exchanges. Patel's undisclosed trade suggests that individuals at the highest levels of federal enforcement are already positioning themselves for a future where this specific corporate entity holds immense strategic value. While the public debate centers on filing deadlines and ethics rules, the movement of capital in the background indicates a quiet consolidation of digital power is already taking place.